We are actually 48 hours away from understanding what the Fed is set to do and the consequences that it's going to have at the markets. And in this video, we're going to be addressing this. So welcome to the channel. Everyone, my name is Nick. For the ones of you new to the channel, hopefully via the stop of this video, you do come to be a subscriber. If we take a brief have a look at what is happening, yes, the FOMC meeting is right here. It starts off evolved on September 17th, but the 18th is in which we get all of those fundamental decisions. And this could truly have vast results at the markets. In fact, this complete week is going to be filled with a ton of volatility. In truth, right now, if we go over right here, we will see that the Federal Reserve now probable to reduce interest fees by 50 BPS at this week's FOMC meeting. Now, in my opinion, I would love to see 25. I sense as even though this is quite diffused, 50, it absolutely shows that something is broken, which might suggest a bad effect on the general marketplace. But outside of simply the FOMC meeting, we also have some key activities to awareness in this week, which include the August retail sales statistics, the building allows statistics, the Fed hobby fee choice, which does appear on Wednesday, like I said, the Fed press convention, which additionally does take place on Wednesday. Fairly Fed Manufacturing Index on Thursday, accompanied by using the prevailing home income information as properly. It is formally Fed week, and sure, it does come with enormous volatility. The exceptional manner to prepare for FOMC meetings or FOMC weeks is to have stable cash at the sidelines. And I usually like to buy, an afternoon or after the dust has settled. So, if we do start to see a few important swings within the marketplace, simply type a sit again, attempt to relax and try and maintain emotions at the neutral territory. But past this, let's surely speak about some things to cognizance on. Number one, Warren Buffett. We've been listening to approximately Warren Buffett selling a ton of shares around Apple as an instance, and now additionally Bank of America. He bought any other billion of Bank of America. And that is, you understand, making people think that, oh, banks are done, banks are completed, they are screwed. Again, one component that I truly sort of take from this is we're starting to witness drama building up around markets, worry constructing up around markets. Everyone is at that factor in time where they may be much like nothing is going to store us. We're simply going to keep to promote off. We are actually officially in a recession. That's it, we're carried out. I want absolutely everyone to apprehend that I individually consider that we're already in a recession. What we're witnessing right now could be capitulation of the markets earlier than one in all the biggest swings to things to the upside, in my opinion. Over right here, we've got JP Morgan. Chief Jamie Dimon has warned us economy faces and final results worse than a recession. I would say the worst outcome is stagflation, recession, higher inflation. Now, numerous people are going to say nicely, JP Morgan, Jamie Dimon, they have pushed nonsense within the past, wherein if we did the other, we would make a ton of cash. I absolutely do agree with that. Jamie Dimon is 100% accurate in this, but the trouble is the time of this proper? When is this definitely going to appear? And anyone proper now could be nonetheless pushing some bullish charts around what the Fed is doing, but additionally we're seeing some worry mongering. In truth, I trust that we see more fear than bullish, you already know, information and bullish outlooks with regards to what the Fed is ready to do. Over here we have the Fed is about to reduce 50 BPS in 4 days from now. Again, recall what I stated, 50 BPS is technically bearish due to the fact it spotlights something going incorrect. Remember the closing time they reduced charges, the bull marketplace began. This is incredible bullish for Bitcoin. Now, the problem here is absolutely everyone is looking at this, and they're looking at it in a way where it is only one path forward. This means that we have to crash or we need to pump difficult. I want to reveal you guys a chart, actual short. Here we've got the Federal Reserve and financial crisis. This indicates us the entirety around recessions, the federal funds effective charge, the Fed budget exponential growth trend, the SP 500, and also fee cuts. Rate cuts are in crimson. And if we have a look at this, we ought to see the first legit charge cut in this chart, going all the way lower back to like kind of 1981. And we may want to see what happened proper after we noticed a good size promote off at the SP 500. You might not say that it's that significant, however, it became tremendous, but from that factor on, it did begin to jump. But recall, this is a lagging issue. It started out to bounce up until 1985. Or 1984, technically, when we saw the next predominant cut. Again, markets went up in cost instead of selling off this time. Then we get every other charge cut. It truly is round kind of like 1989. We have a bit of a flat line at the SP 500, and then we sell off, after which we go crazy at some stage in the dot-com bubble. And this takes place all the way until more or less like 2000. 3 rate cuts in between there, nothing too sizable till the remaining one wherein a recession hits. And it became a moderate recession. We sold off heavy in terms of the SP 500, one of the worst promote-offs in records, as you guys are possibly all conscious. And then we pump into the 2008 crisis. Here we have like 2007, after which, boom, we crash. There we've the credit score crisis, SP 500 crashes heavily, everyone's panicking and so on. Then we move all the manner to 2020, wherein we did see another price reduce. But do you guys see what happened? We get the charge reduced, and they technically stated that became a recession going off of this chart from actual funding recommendation. However, we bought off heavily at the SP 500, after which we rebounded. So while we consider bullish or bearish, sure, we can be in a territory wherein we're about to pump closely. However, do not overlook the fast-term max ache that may want to appear. Everyone reputedly wishes the Fed to cut costs. There is a broadly famous idea that a Fed pivot is right for markets. It is patently fake. After the Fed pivot to charge cuts, the marketplace nearly usually crashes and corrects. And let's take a look at history, yield curve inversion, then normalization, blue Fed pivot, purple recession, endure marketplace, and bottom black. Maybe this time is specific, maybe not. And here we've the pivot. We have the location of pivot. We additionally have the yield curve inversion, and then additionally the recession, as you guys can see. So the pivots are in crimson. We have one right here returned in kind of like 2000 or so, back in 2007, just like I mentioned. We also have one in 2020. And if we are approximately to peer all over again, every other one right here, it is questionable on what takes place next. Are we going to have a promote off, or are we going to pump? Because what may want to appear now is a first rate correction. Then we pump. Everyone is simplest watching for up. That is a massive hassle. Even over here, we've got 4 days till the FOMC meeting, where Powell will likely reduce by using 0.25 odds. Odds are currently 50% for 0.25 and 50% for 0.5. The similarities between 2007 and 2024 are wild charts and comments. And yeah, that is simply a very good insight now. This is quite bearish technically. We have this submit isn't calling for a 2007 crash. I'm sincerely stating the intriguing similarities in timing and economic signs. And yes, it's far very comparable. I will say that proper now. But the huge component to focus on here is what took place leading as much as 2007 and what came about up to now, main as much as in which we're at currently. In reality, the primary issue that I want to take from all of that is just how parabolic things went leading as much as the crash in 07 into 08. We have not begun to genuinely see that occur around these markets. And I recognize that you men are likely going to mention, well, what approximately stocks? Yeah, technically shares had a pleasant run up, but we have not surely seen something loopy occur where it justify a huge crash and prefer a 07, 08 like big flow to the disadvantage. But over here we have this week goes to get exciting. Powell is predicted to announce a rate reduced throughout Wednesday's FOMC meeting with a 5050 danger of either a .250 or a .50 discount. Get ready for the mega crash. Everyone is almost waiting for a main crash. That's why I do accept as true that we probably accurate a bit, and then we pump. And the purpose why I say this, due to the fact, once more, I recognize which you men are going to mention nicely, Nick. I do not understand what you're calling for. You mentioned a couple of areas in time wherein we did correct and crashed. Yes, I did. But the trouble right here is that there's a number of negativity around the Fed reducing charges. If we do have a crash, in my opinion, it is going to be a correction that everybody will call for tons lower rate motion, a much larger crash. They're going to be calling for a 2008-like crash or a 2000-like crash. I assume this time in relation to a Fed reduce, we can possibly correct barely. Everyone will overreact, and then we are able to go parabolic. And I want to go returned over here to what Jamie